Are you thinking about buying or selling stocks? Are you curious about how the market has performed for the first quarter? Well, then keep watching. I'm Amanda Hayes, president of AKH Financial Corp, and this is The Money Mindset. Today's agenda is very straightforward. First, I will share with you a brief economic and market update, and then we will discuss some proactive guidance moving forward. Before I begin, it is always important to review that there are 5 key areas of financial planning. Those areas are preservation planning, retirement planning, tax planning, estate planning, and investment planning. As a comprehensive financial services firm, we try to always consider the impact of any recommendation on not just one, but all 5 of these areas for our clients. Now, in this video, we will be focusing primarily on investment planning and the equity markets. We believe an educated client is our best client. At our firm, we partner with our clients because we believe knowledge is power. One of our missions is to share with clients any knowledge that can help them in making the most informed decision when it comes to their finances. Looking back to the start of 2020, investors have had a most unusual ride. On February 19th of 2020, the S&P 500 closed at a then all-time high. Sadly, without warning, when COVID first became a worldwide pandemic, investors saw a 30-plus day decline of over 33%, which finally bottomed on March 23rd of 2020. For those who didn't panic, on August 18th of 2020, the S&P rallied to a new all-time high. Fast forward to late April of 2021, and the index, despite volatility, again made all new time highs. Interest rates continue to be in the forefront of our watch list. With vaccinations being distributed and the economy on the rebound, the Federal Reserve offered an improved economic forecast during its March 2021 monetary policy meeting. Despite the predicted upward trend of the economy and inflation, the majority of the Fed Policy Committee members remain steadfast to keeping their key federal funds rate at or near 0%. They cited 2024 as the first year they anticipated hiking rates because the Fed needed substantial further progress towards employment numbers and price stability before they could raise rates. You all heard it, Jerome Powell wasn't even thinking about raising rates. Now, safety comes with a cost. Have you seen the interest rates that banks are currently offering to savers? According to Barron's, the average bank money market rates on April 19th of 2021 were 0.07%. The 12-month CD rate was 0.18%. Did you know that at a rate of 0.18% without taxes, it would take over 350 years to double your money? Nobody's got that kind of time. For many investors, today's low rates might not help them reach their financial goals. Therefore, equities could be a very meaningful part of your diversified portfolio. This past quarter brought investors many tempting distractions. Media magnification is a powerful force. Sensational headlines can leave investors overwhelmed, stressed, and confused. Our objective is to help you carefully create and follow a strategy with realistic financial goals, because veering off course in the hopes of short-term gains could potentially compromise the financial fortitude of your long-term goals. Call us if you have any questions about your path, and please contact us before making any sudden financial moves. Also, your personal health is imperative, and stress doesn't help. So let's all try to stay healthy. An essential factor when selecting the types of investments to include in your portfolio is your time horizon. This is the amount of time that you earmark to reach your financial goals. An investor that can commit to a 10-year time horizon can review different choices as compared to someone who needs, say, 6 months or less to use that money. Investors should always try to match their portfolios to their goals and their time horizons. This can help them keep the big picture in mind and hopefully curtail any distractions caused by short-term developments. Our goal is to help clients avoid making impulsive investing decisions. Another key investment factor that you can control is your risk appetite, or the amount of acceptance that you have for risk. We want to emphasize the importance of keeping your focus on what you can control versus what you cannot control. This is your core money mindset. As this illustration shares, you can control your risk, your time horizon, and your behavior. Although many investors focus on outcome or investment return, that's something that you cannot control. Reviewing your risk appetite to see if it has shifted or checking to see if your time horizon has changed is so important. After you fully outline or update these two foundations for your investment strategy, you can then match your behavior to your investment plan. Thinking long-term is still a great way to look at equity investments. Typically, the most successful investors think and act for the long term. It is nearly impossible to predict exact market movements. However, you can prepare. You see, equity market volatility is still present, and any equity market downturns or declines are a normal part of the investment experience. Now is an excellent time to move forward with confidence in the path you've chosen toward your investment goals. But remember, equity markets are currently high, and we always alert clients that we need to proceed with caution. Recently, President Biden said that he was going to recommend some changes to tax rates and tax laws. While nothing is currently approved, this is something we will be watching closely. We will be discussing with clients, where appropriate, the strategies that come with designating both primary and contingent beneficiaries. Another proactive planning topic for taxes we want to be watching very, very closely is that in March, Senator Bernie Sanders filed a Senate proposal called For the 99.5% Act. This proposal was to reduce estate tax exemptions from the current level of $11.7 million per person to $3.5 million per person. That's a big change. The estate tax rate under Senator Sanders' plan would start at 45% and grow as high as 65%. This is a proposal we are definitely watching closely as things develop. We will be talking to clients who would be affected by this change, and we are going to develop strategies that will help to mitigate this current tax consequence. Remember, always see a qualified tax accountant if you do not have one before proceeding with any types of tax changes. So let's do a quick recap. Here are some of those key points. Despite continued volatility, equity markets in 2021 have started out on a high note. Interest rates are expected to remain low for the foreseeable future. The economic recovery is still largely based on vaccine distribution and the reduction of COVID-19 cases. New administration brings on new changes and proposals. Also, caution and vigilance are critical. Please avoid distractions that sway you from the path of your financial goals. Focus and make sure that your time horizon and risk appetite are congruent with your goals. And as always, call us with any concerns. So what can you expect from AKH Financial Corp? You can expect regular communication, more frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. If you like this video, then share it with a friend. We would be so honored if you would share this video with some friends or let us know who we could add to our mailing list so that we can help benefit others from all of this information. Check out our website at www.amanda-hayes.com for a list of our gold medal services and other great financial insights. Or tune in weekly for Money Talk with myself and legendary talk show host of Florida, Mark Bernier, every Thursday right after the market close at 4:05 p.m. on 1150 a.m. WNDB and 93.5 FM. Thank you again for your time today.